Welcome to The Explainer. Today, we're doing something a little different. We're going to put TAV Airports, a major global airport operator, through what we're calling the Buffett test. We're going to look at it through the eyes of one of the most legendary long-term investors ever.
You know, this single idea really gets to the absolute heart of Buffett's entire philosophy. He isn't interested in what's hot this week. He's searching for companies with a durable competitive advantage, a business so solid you can feel confident about where it'll be a decade from now.
So that's the big question, right? Can a business like this, which is so tied to the chaotic world of travel, really pass that kind of demanding test? Well, to figure it out, we're going to break TAV airports down using 3 pillars that Buffett himself would be looking at: the business, the numbers, and the management.
Okay, let's dive right in. First up, is the business itself actually built to last? Or in Buffett's world, what is its competitive advantage, its moat?
The moat is one of Buffett's most famous ideas. It's like an economic fortress, a barrier that keeps all the competitors away from the castle. So, the billion-dollar question is, what is TAV's moat?
Their moat starts right here. TAV isn't just some landlord that rents out gates to airlines. No, they manage services at every single point a passenger touches. We're talking ground handling, security, all the way to the duty-free shops. This gives them amazing control over the whole experience and, of course, lots of different ways to make money.
And this is where that moat gets really, really wide. It's not just one airport. It's a whole strategic network of 15 of them, often locked in with long-term government deals. Just stop and think about how hard it would be for a competitor to build something like this from scratch. I mean, the cost, the politics, it's almost impossible.
Now, what's really fascinating here is the timeline. These aren't short-term leases. These are concessions that lock in TAV's spot for decades to come. I mean, just look at Antalya and Ankara. They have the rights to run those airports until 2051 and 2050. That is a level of predictability that long-term investors, well, they just dream about that.
So TAV has a powerful business model. But does the financial story hold up? A wide moat should mean strong, predictable results. So let's follow the money.
Just think about this number, 32. That's the average length of TAV's operating contracts across their entire portfolio. If you're an investor who wants to predict the future, like Buffett, having 32 years of business practically guaranteed is a huge signal of stability.
And you can see how that predictability could turn into serious earnings potential. The company's forecasting some big numbers for 2025. EBITDA somewhere between 520 and 590 million euros. You know, consistent, growing earnings like that are a classic sign of a healthy, dominant business.
But it's not about growth at any cost. Buffett is famously allergic to companies with too much debt. TAV's management is aiming to keep their debt at a really manageable level compared to their earnings. And that shows a discipline that's focused on long-term financial strength, not just a quick expansion.
And they are definitely not sitting still. They're plowing serious money back into the business, over 200 million euros for the Ankara expansion, and over 250 million for a brand new terminal in Almaty. This is exactly what a great company does. It uses its own profits to get stronger and fund its own growth.
Okay, so we've covered the business, we've covered the money. Now we get to what might be the most important part for any long-term investor, the people running the show. Can you trust them? Are they really thinking about the future?
This quote from Buffett says it all, really. When your business is a powerhouse, you don't need to mislead people or play accounting games. The business speaks for itself. So, the real question is, does Tzu's management seem to fit that description?
Well, if you look at their own strategic plan, their Pioneers 2025 roadmap, it shows they're thinking way beyond next quarter. They're talking about smart airports, improving the passenger experience, and hitting some very ambitious sustainability goals, like net zero by 2050. That's long-term thinking. And having a healthy culture, like their Great Place to Work certification suggests, is so important for actually making it all happen.
We can also hunt for clues from the outside world. For example, recent data showed this interesting little streak. For 10 days in a row, foreign investors were buying more and more of the stock. It's a short-term thing for sure, but that kind of consistent buying can be a sign of growing confidence from the global market in the company's long-term plan.
So we've got a strong business, sound financials, and what looks like credible management.
Let's zoom all the way out now and connect these dots to the bigger picture. What massive global trend is TAV positioning itself to ride? When you look back at their recent history, you can see they've been playing chess, not checkers. Partnering with a giant like Group ADP, grabbing key assets like Antalya and Almaty, and then locking in those deals until the middle of the century, these are strategic moves for long-term dominance, not just for a quick win.
These huge investments that we see here in these critical locations, they aren't just for today's travelers. They are being built to handle a massive wave of future growth. And that brings us to our final, pretty mind-boggling number.
20 billion. That's the projected number of air passengers every year within 2 decades. That is more than double today's traffic. To support that kind of growth, the world is going to need an estimated $2.4 trillion in infrastructure. That is the massive tailwind that TAV is setting its sails for.
So, just to wrap it up, this has really been an exercise in using a time-tested framework to understand a company's potential. We've seen TAV's wide moat, its financial discipline, and its management's long-term vision. It all seems to check the boxes of a Buffett-style analysis.
And that leaves us with a final question. In an industry that is set to double and in a world that is so often obsessed with what's happening tomorrow, maybe a patient, long-term view is the only way to really see the runway ahead.